This is Taking Stock on Bloomberg. I'm Pimm Fox. Now, if you're watching this, you may be on your way out the door. AAA projecting a jump in holiday travel this Memorial Day weekend. 2.15 million Americans will be up in the air. They'll be flying. That's 2.5% increase from last year. Airlines seem to have plenty to worry about right now, including the economy, fuel prices, and even volcanic eruptions. My next guest says stocks, they are headed much higher. She's an analyst top-rated by Bloomberg on 11 stocks, including Delta Airlines, Continental, and U.S. Airways. Helane Becker of Jesup Lamont, Managing Director. Good to have you with us, Helane.
Thanks
So what's the state right now? I mean, can you get a seat on an airline?
Well, it's pretty hard right now. Load factors are in the mid-80s, which means that a lot of flights are 100% booked.
Load factor, that's what the airlines speak for, just how many seats are actually in their seat.
Right, how many people in the seats. So the percentage of seats that are filled right now this summer is significantly higher than it was a year ago, and loads drive profitability. So that's why we're seeing higher profits this year in part. But yeah, it's going to be very difficult if you haven't already booked your summer trip to really get a vacation destination that you might want to go to.
And is this because the airlines just ripped capacity out of the system? They just grounded a lot of flights and said, we're not going to compete on price anymore. We're just going to pull back on the number of aircraft that we put in the air.
Yes, exactly. Over the last 5 years, 20% of the domestic capacities come out of the system, and about 8% of the international capacities come out of the system. So you've had a huge decline in overall industry capacity, and that's had the effect of driving prices up, which is good for the airlines, but maybe bad for the consumer. You might have to go to offbeat destinations, someplace like Mexico in the summer when you might want to really go in February or March. You might have to go in August or September to get a better rate.
Right, the off-peak travel locations.
Exactly.
Let's talk about a merger or a combination in the travel industry. Continental and United Airlines. What do you think about that combo?
Yeah, so we think that there's a better than 80% chance the merger gets approved. They already are both together in the Star Alliance. They don't really.
But that didn't happen as easily as everyone thought, right? I mean, Continental wanted to get into Star Alliance, and the U.S. government said, well, not so fast.
Not so fast, yeah. And they did some carve-outs. They did about 8 or 10 routes where the two are not allowed to code share on, and those are mostly international routes where the two are seen to compete. But the rest of it got approved, and actually the Justice Department did not want the Star Alliance approved. So it's going to be an uphill battle with respect to the Justice Department, but in the end we think the deal will get done. But if you notice, we downgraded Continental and United from buys to holds after the deal was announced exactly because of that. Although the numbers through the summer will look really good, the only news related to the merger can be bad.
Right, but you don't want to hear anything until the deal is actually approved. Anything else is going to be things like having to give up routes or change things in the hub market.
Exactly. Either you're absolutely right. Either give up routes or carve-outs or make adjustments to the exchange rate or whatever. Anything that comes out can't be good from here on in until the deal actually closes. And then we'll take another look at the combination. Now,
they're going to be operating from a lot of hubs, right? I mean, this combination of Continental and United, I mean, what? They're talking about Newark, right? Liberty, that's a big hub. You're going to have LAX, SFO, as well as what's happening in Chicago, Houston International, right? That's another big hub for them. But you also mentioned in your report something about Cleveland Hopkins. What is the deal in Cleveland?
So if you look at the hubs, Continental is Houston, Newark, and Cleveland, and United is Chicago, Denver, San Francisco, LA, and Dulles. So that's, I think, 8 U.S. domestic hubs.
I'm glad you can remember them. That's why we love you. All right.
Exactly. So thank you. Well, so Cleveland is, I don't want to call it a hub on steroids. That's a line that someone else used once before. Actually, Gordon Bethune used to use that, but not about Cleveland.
And he was the head of Continental, so he got to use that.
Exactly. But the point is, Cleveland is a relatively small city that may lose some share to Chicago. If you're in the Midwest and you need to go to London, you might want to connect over Chicago rather than over Cleveland, because in Cleveland you might only have 1 flight a day, or in Chicago you might have 8 flights flights a day. So if something goes wrong with your one flight, you're not stranded in Cleveland. You can get out on hopefully get out on a different flight. So I think that's what we're seeing. We're going to see some capacity at some of the hubs that come down, maybe replaced instead of mainline aircraft, regional aircraft, and so
smaller aircraft.
Exactly. You'll see 170 or 150 passenger planes replaced with 90 or 70 passenger planes, and I think that's kind of the trend for them once the merger gets done.
All right. Now, once the merger gets done, or maybe even before that, what happens to U.S. Airways, right? Symbol LCC. I mean, are they looking for someone to actually, marry?
Yeah. Well, they were used as a stalking horse, of course, right? When United itself leaked that they were talking to U.S. Airways, and Continental quickly called them up, and there you go. So we think U.S. Airways can actually stand alone. I think they've done, for the first time in years, they're not looking for capital, so they don't have a liquidity issue, which is huge. Number two, they don't hedge jet fuel. So with jet fuel prices coming down really in the last month from $86 oil coming down from 86 to 70, that's $3 a share in earnings.
And that was something that a lot of people missed, right? They didn't realize that U.S. Airways doesn't have a hedging program for their jet fuel.
Right, exactly, because for so long they did, and they had posted some losses last year really related to the hedging. So they made the decision not to hedge, and they decided they kind of roll the dice, as it were. And as it turns out, it's being very beneficial. And the bottom line is that we're estimating earnings for the quarter of $1.38. That's the second quarter. The consensus is, I think, around $1.01. So we're well above the consensus, but we really think the consensus is going to have to come up closer to our number. Our number may be a few cents too high, but the consensus is too low.
All right, and that's why you got, the $13 price target, and you've got a buy rating on the shares of U.S. Airways.